Congratulations! By watching this video, you've taken the first step in becoming RTI compliant. If you've already read some of the information on our homepage, you should at least be aware that the introduction of RTI means major changes for all employers in the way that they operate payroll. But what exactly are those changes? Quite simply, each time you pay your employees, you must send an RTI submission to HMRC, for example, every week or month. You should also be aware that if you make any additional payments outside of the normal payroll cycle, such as a bonus, then you will need to make an additional submission. These submissions will be known as an FPS, Full Payment Summary, and must be completed using RTI compliant software. For those already using payroll software, your provider should have the required changes in hand, and you should receive a software update soon. If you don't currently use payroll software, you will need to make some fast decisions as to the best way forward to ensure compliance. But what are your options? You could source and purchase an RTI compliant payroll software package. Remember, you will also need to purchase training for those required to operate it. Download and use the updated HMRC Basic Pay-As-You-Earn tools. However, these are only available for employers with 9 or fewer employees. Or engage a third-party payroll bureau who will already be operating RTI compliant processes, such as Well Paid. So, once you have a solution in place, what next? There's a huge amount of information that employers must submit on an FPS. Unfortunately, we don't have time to give you all the detail here, but the following overview should at least help to get you started. Employer information, including items such as your HMRC office number, employer pay-as-you-earn reference number, and your accounts office reference number. Employee identity information, such as national insurance number, name, date of birth, gender and address. Employment, occupational pension or annuity details. Information you must submit for new starters or leavers, or when you introduce new occupational pension schemes, for example. Payroll and year-to-date information, including information such as taxable pay and tax paid to date in this employment, pay frequency and pay date. Pay and deductions information. All pay and benefits taxed in the period, any statutory payments made, etc. National insurance contributions. You will need to report the NI category letter, the gross earnings for national insurance contributions in the period, and the to-date values. National insurance liability information. Employers' and employees' contributions payable in the period and to date. Further detailed information can be found on the HMRC website. You may have recognised by now that a lot of the information identified as being required for an FPS would previously have been submitted to HMRC at tax year end on forms P35, P38 and P14 in April of each year. By making these FPS submissions each time you pay your employees, there will no longer be a requirement to submit these end-of-year returns. However, you must still provide your employees with Form P60 by 31st of May each year, and where any of your employees are in receipt of benefits, Forms P11D, P9D and P11DB must still be submitted as normal by the 6th of July. As stated on the website, the Department for Work and Pensions will be using the information from these FPS submissions to assess an individual's entitlement to benefits. Therefore, it is critical that the information supplied on behalf of your employees is as accurate and up-to-date as possible. I would recommend that you spend some time checking your data now, before you start submitting your FPSs, as any inaccuracies could cause problems. So, what else is changing? Remember we spoke about the employment, occupational pension or annuity details that must be submitted on an FPS, and the fact that this should include details of any new starters or leavers. Effectively, the information you will need to provide here replicates the information that you would have sent to HMRC on forms P45 and P46. As such, there will no longer be a need to send these forms to HMRC. However, you will still need to collect a P45 or P46 information from any new employee. And you will still need to provide leavers with a copy of their P45 as normal to take to their new employer. Here's a quick recap on all the forms we have mentioned so far. No requirement to send end-of-year payroll returns to HMRC, except where benefits in kind apply, but you still need to provide a P60 for your employees. You still need to collect a P45 from a new employee or have them provide P46 details, but you don't need to send either form to HMRC. You still need to provide a P45 to a leaving employee, just as before. So, you have a solution in place and have been making regular FPS submissions. But what happens if you suddenly don't have any employees to pay in any one pay period? Quite simply, you must still make a submission to HMRC on an Employer Payment Summary, an EPS, which must be submitted by the 19th of the following month. Previously, you would probably have called your local HMRC office to tell them no payments were due, and no further action would have been required. Not so from 6th of April this year. Further details of what needs to be included in this submission can be found on the HMRC website. An EPS would also be sent where you want to recover statutory payments, have suffered CIS deductions, or have a national insurance contributions holiday. What if you currently have no requirement to register with HMRC to operate Pay As You Earn? Let's remind ourselves of the situations where this would apply. You pay your employees below the current Pay As You Earn threshold or the National Insurance lower earnings limit. None of your employees have another job or are in receipt of state, private or company pension. You do not provide your employees with any benefits in kind. Note of caution. Whilst you may not be required to make an FPS submission now, if any one of your employees breaches those conditions in any one pay period, then you will be required to make an FPS submission, not only for that pay period, but from that point onwards, for all of your employees for the remainder of the tax year. As you will not be registered for Pay As You Earn, and so will not have an employer Pay As You Earn or accounts office reference number to submit against, this may present a problem in satisfying the FPS submission conditions, which state you must complete your submission on or before the date that payment is made to your employees. That leads us nicely on to our next point today, HMRC fines. HMRC have introduced fines for non-submission of an FPS or EPS, which have been set at £100 per 50 employees per month until appropriate submissions have been made. However, to help employers transition to the new RTI requirements, HMRC have announced an easement of fines for a short period of time. But from October 2013, any employers still not complying will be contacted by HMRC, stating that if they do not comply by April 2014, then the standard fines will automatically begin to apply. Our final piece of information in this RTI webcast is to make you aware of the changes required where you pay your employees by BACS using your own service user number or SUN number. In order for HMRC to be able to cross-reference the FPS submission in respect of your employees with the actual payment made to them using the BACS system, a random generated reference number will need to be added into the BACS file. BACS will then forward information from the BACS file to HMRC using these random generated numbers to identify employees. And HMRC will tie the information from both submissions together. If you pay your employees by BACS, then you need to contact your BACS provider straight away to make sure that the BACS software you are using is RTI compliant, as you may be operating on an old version. As you have probably gathered, the next 12 months are going to be difficult for all employers as they learn about the new RTI requirements and what is expected of them, start to implement the new working practices, and get to understand what the consequences of non-compliance might be. Here at Well Paid, we have already been working hard to understand all of these changes taking place and updating our services to include the new legal requirements so that we can help our clients transition to the new way of working with minimum fuss. If you are watching this webcast, then I'm guessing that you still have a long way to go before you can be comfortable that your payroll processes satisfy the RTI changes coming on board, and of course the RTI clock is ticking relentlessly. Get in touch with Well Paid today to find out how we can make RTI less taxing for you.